AMC Entertainment, ticker AMC, is down again today, about 8% as we're recording this video. Now, why is this? To no surprise, we made a video on this last week, knew exactly what a stock like this would do, and that is basically diluting shareholder value even further. So again, they filed for a sale of up to another 40 million shares. And again, this is why I talked about this stock going last week or even before that, even going back months. We know that's all AMC doing is they've got a lot of cash on hand. They've now got quite a lot of safety on the balance sheet, but they for some reason have to keep diluting their shareholder value. So why would you ever want to invest in a stock like this? Again, this makes no sense to me. It's why I personally don't hold any shares in AMC, but we will cover the technical levels to be paying attention to on AMC because it can provide some potential good swings or day trading opportunities, but again, never anything I would invest in considering how much dilution they have done to this stock and are continuing to do and will do. So again, if we continue to the downside, we have two supports at levels we haven't yet hit, and that's going to be at $3.90 and $1.90. Yes, we have never hit these levels. How do we have these supports? These are done through standard deviation channels. So again, all that does is just take the price movement in and then set deviations outwards. But these are how I always do technical analysis. They seem to be very accurate. So again, if we continue to the downside, this is the only time I'm paying attention to really play AMC. Being long bias potentially into the 390 and the 190s. So that would be something I'll look to play if we can sell off that hard. Which again, considering just that we've gone from about 62 going back about a month or less than that, down 90% just in kind of 3 months. Can it go lower? Definitely. Just because these stocks are going down, you know, when you see them down at like $2-3, does that mean they cannot go lower? Yes, it can. And what tends to happen, like you saw on AMC, they do a reverse stock split, then they'll be at $10-20 and they just sell back off to that dollar until they have to do that reverse stock split again. In AMC's case, they don't really have to do these reverse stock splits. They're just doing it to themselves by again continuing to dilute these shares. But again, the support's at 390 and 190. Now, just to cover the resistances in case we get any sort of an upside move or a squeeze, which again, a squeeze is just, and one thing I do want to note with this stock and why you're seeing the sell-off when it dilutes is because the reason a lot of people hold AMC is for that short squeeze opportunity. If they're diluting more shares, all it does is lower the probability of a short squeeze because again, there's so many more shares outstanding. So the likelihood of a squeeze is obviously going to be significantly reduced. But to cover those resistances, we have $15.10 and $17.50. But again, I think on a stock like this, the main focus is going to be on the support. So 390, 190. Block ticker SQ is down over 5% today. Now, what are key levels we want to be paying attention to on a stock like this? So to quickly cover the supports first, if we continue to sell off, we do have supports at $50.60, 45.70, and a further and kind of final support at $43. So again, these can be used in kind of normally 3 key ways, I guess, is either if you're a short bias trader, these can be used as targets. If you're a long bias trader, we can look to play the bounces off this. And if you're an investor, then normally buying at these kind of key levels can be good areas to be, say, dollar cost averaging. So those are the 3 key supports we're paying attention to. Now, what else do we want to be paying attention to? $54, we actually hit this today. Again, this is our first deviation on the 6 month. Normally this is used as a support. Looks like this is going to turn more into a resistance, so especially if we come down to $50.60, then look at a test of 54 because that will turn into a resistance. And if we can break that, retest it as a support and a hold, then that's good indication that we can continue up, and then we would be targeting 58.50. Now, if we go higher, you want to be paying attention to this $62 level. What this is statistical mean. This is also known as fair value. So when we look at this kind of value on a stock, what this tells us is going over the last year of data, if you're, or at least 6 months, but up to a year, if you're buying at or below this value, you are buying a discount on the year. So that's normally how we look at this, and it's why if we're trying to invest in stocks or get long bias on stocks, we want to be buying them when they're below this value, because from a reversal standpoint, it makes more sense to be buying at a discount and then trading to that fair value. C3 AI is down over 15% as we're recording this video. Now, why is this? So what you can see is the company did release their earnings today, and they did also say they do not expect to be profitable in Q4 of this year. So again, this is what is leading to this massive sell-off. So what are the key levels we want to be paying attention to then going forward? So the level that we kind of hit near the open was 27.50. This is normally used as a support. Again, off a fundamental release, we don't really tend to trade technicals. So it's kind of waiting more. I would kind of wait until today is finished before we start trading these levels. But again, we broke kind of straight through that. That's normally used as support, so it will most likely now turn into that a resistance. But what I'm really paying attention to is if we continue lower, we have a $21 support and a $17.50 support. These are our second deviations between the 6-month and the 1-year chart. And just to give us one more support, just in case we had a quite a strong move, we do have another level at $11.75. So again, they're going to be the 3 key supports we're paying attention to. Again, 21, 17.50, and 11.75. These are all relatively high probability setups because they are the second deviations and the third. Again, we don't usually tend to trade these first deviations because they're a lot lower probability. So those are the key supports. Now, what are the key resistances? So again, this 27.50 will now turn into a resistance. Again, I would give today, it kind of let it play out, and then tomorrow, obviously, if we're closing below this 27.50, watching for that retest. So if we retest it, if selling pressure kicks in and we break that low, then obviously we can look for a $21 target. On the other hand, if we do retest this, we end up breaking through, just looking for that retest as a support, and if so, then we could start looking for those upside targets at $30.50, and then also the gap fill location at around $31.50. Now, if we go any higher than that, then the only other level we're really paying attention to is going to be that $37.60. What this is fair value. This is statistical mean. So the way we use this level is if we're trading a stock long bias, this will be our target to the upside. Because again, this is fair value. If we're reversal traders, we're looking to trade to that fair value, to that mean. So again, if we're getting long bias anywhere from here or above, we're looking to trade to $37.65 as that absolute kind of final target to the upside. Genius Group, ticker GNS, is up 10% as we're recording this video. We're chilling currently at around $1.15. Now, why do we keep coming back to this level? Because you can see we kind of keep pushing towards this level. Now, what this is the fair value on the stock. This is considered statistical mean. So that's most likely why we keep pushing towards this area. And what they can also mean is if this is a stock you're looking at buying at long term, looking to invest in a stock like this, then buying at $1.15 or below is normally where we look to do it. Because again, we want to be buying at statistical mean or below. And again, we get 2 sets of fair value areas, so 2 statistical means. The other one is at 30 cents. So again, if you're buying at 115, you're buying on the higher end. But again, it's just watching how the stock reacts and where we can pull back in time. Because if you go back to January, this stock was actually sitting at that fair value area of 30 cents. So this stock can definitely move to the upside, but definitely to the downside as well. So again, if we're looking to buy this stock as a longer term investment or a longer term trade, we're always looking to buy at under 100 and at $1.15 or below. And again, anywhere within that range is normally where we look to buy it. Now, to go on to the targets, what are we paying attention to as resistances? So if we continue up, we have a $2 resistance, which is kind of the one we came into more recently. And then we also have the next one at 267, which is the one we kind of just missed on that previous kind of run up. And again, these are our first deviations between the 6-month and the 1 year. And just in case we kind of break this move that was recently done, we have one further resistance at $3.77. So again, just to recap, if we're looking to buy this stock long term, if we're looking to buying it, I always want to be buying below fair value, which in this case is at $1.15. So looking to buy within the range of 115 to 30 cents. Now for targets, we're looking at $2, 267 and 377, all as targets to the upside. And again, these are targets if you're long bias, but can also be played as reversal levels if you're a reversal trader. And on GNS, again, they do have options, which is great because it means, yes, it's going to cost us more to short because it is hard to borrow. But if you are looking to reversal trade this or short it, we can short it and buy protection. So again, we're not risking unlimited amount of money. You are defining that risk by buying, say, a call to define your short shares. Marathon Digital Holdings, ticker MARA, is down nearly 12% today. Now, what are some key support and resistances we want to be paying attention to? So, if we push to the downside, we do have supports, not quite where we are now, around $11, but we would want to see a further sell-off to around $9, which would be $8.95, would be that first support we're paying attention to. If we go lower, we're then looking at $7.90. And if we can do a further push to the downside, that would be $5.45. Now, you might be thinking that's quite a strong move in a stock like this. But again, don't forget, this does move quite similar to cryptocurrency in general. So if you start to see pullbacks in Bitcoin, you're most likely going to see a pullback on this stock. And again, just depending on where those values are, decides how much this stock can sell off. If you go back to January, December last year, this stock was sitting around $3. So, all the way down here. So it definitely can do that kind of downside move. And that's why we're looking at the supports of 5.45, 7.90, and 8.95. So those are the key supports. Now, what are going to be targets or potential short bias levels? So if we push to the upside, we have targets at $15.95 and $19. Now, these would be the first deviations to the upside. Now, again, these can be used in multiple ways, these sorts of levels. So if you're if you're a long bias trader, you might wanting to buy up these supports and trade to the targets of $16 and $19. On the other hand, you may be more like me, and that's being a reversal trader, and so that's going to be looking to short these sorts of levels and look to trade them back down to some sort of a fair value. Microvision, ticker MVIS, has done a massive run before, going from around $1.90 to around $8.20. And again, this all happened in about a month and a half. Since then, all we have done is now sell off, and it looks like we're pushing back down to that kind of a 3-month low of $1.88. So what are we paying attention to as levels on MVIS? So right now we do have a support at 230. The volume is quite weak today, so it was something I was looking to day trade, kind of just stepped away from it, just again because considering it's trading a bit more like a barcodey sort of stock, which again is not something I want to be day trading at all. But if volume comes in, then again that could be a key level to be paying attention to. But if we do continue lower, we have more supports, and that's going to be at $1.70 and $1.38. So that's kind of more what I'd be paying attention to on this stock, because when you come into these blue lines, these are second deviations. This is a lot higher probability that we get a bounce, and the reason for that is if you understand standard deviation, you know that 95% of data should be above that second deviation. So again, if we come into these kind of lows, that's where we would more likely start to see a bounce. You can quite often get a bounce at these first deviations as well. But again, if you understand standard deviation, that first deviation, it has a 68% probability. So again, it's a lot more chance that these levels work out than this one. So again, we can trade it, but we'll tend to use reduced size. So 170 support and 138 is what I'm paying attention to from a support side. Now, if we start to push up, if buyers start to step in now and we start continuing to the upside, then what are some resistances we may want to be paying attention to? So we have $2.80 and $3.25. Now, this would take us into fair value, this $3.25. So if I was long bias, if my average is anywhere below this, that would be my absolute final target. I would look to take my profits coming into $3.25, just because again, if we're reversal traders, we're using standard deviation, which is a reversal way of looking at stocks. Once you come into this value, it's a gamble which direction we go, so it wouldn't really make sense to be holding stocks past this level. So that would be kind of the fair value which I would target. And if we do go higher, obviously the range of fair value does normally have two areas, so that's $3.25 to $3.90. But again, if we're trading, we tend to just trade into that first one to reduce the gamble kind of probability. But just to note as well, 4.25, this is our first deviation on the 1 year. So as you start coming into this area, this is where you're considered a lot more overbought. And then we can start looking at this stock short bias. Again, it is hard to borrow, but it does have options. So even if we're paying the elevated price to short the stock, we can always define that risk with the options, which can make it a good stock to potentially short if we start to squeeze out. And again, to consider it squeezed out, normally when we're at that, going to be at that 4.25 area or above. Mullen Automotive, ticker MULN, is down again another 8% today. Obviously, not really surprising. This is all this stock does, is sell off. But what are key levels we can pay attention to? We can't go for the longer term levels like we normally do, because on a stock like this, they're just about, you know, a 500% move to even come near to one of these levels. So all we can do is look at the 5-day and 10-day levels. What this means is if you're switching these levels, if you're watching this a week down the line, then these levels are no longer significant, because again, these need to be updated about every 3 to 5 days if we're paying attention to these close expiration levels. But to quickly note what these are, again, right now we're sitting around 41 cents. If we sell off, which is most likely going to be the way we go, we're looking at a 37 cent support and a 32 cent support. So those would be the kind of 2 close key supports I'd be looking at. And then if we had quite a big, significant move, we do have another support at 23 cents. So again, these are the 3 key supports I'd be paying attention to on Mulling for the next kind of 3 to 5 days. On the other hand, if we start to see an increase in stock price, which again, wouldn't be looking at for as much, we would have targets if you're long bias, or these can be short bias levels if you're more of a short bias trader or a trend trader. So we'll be looking at 48 cents, 53 cents, and 56 cents as key resistances if this stock pushes to the upside. Now again, it is hard to borrow, doesn't mean we can't short the shares, just means they're going to be more expensive. And again, we can always buy calls to define that risk, which I would always do, even though on a stock like this, I do think we will just continue to sell off and sell off and sell off. They'll do a reverse stock split, we sell off, sell off, sell off again. But it's all about being kind of prepared and kind of defensive. And in a stock like this, if you are shorting it, always make sure you are buying some sort of hedge. If that's just buying outright calls, just to make sure that risk is defined and you can't, you know, blow an account on a trade like this. Because again, it always could happen. If you're shorting it, say 40 cents, could fall to, it could then push up to say $100 or $1. And again, you'll be down over 200%. So again, if we're trading anything like this short buys, even though the probability of it squeezing is going to be quite low, it's always about just defining that risk wherever we can. And again, considering the protection seems to be quite cheap, you can literally pay $1 per 100 shares. For the sake of that, it might make sense just to get that protection. Novavax ticker NVAX is up 11% as we're recording this video. What are the key levels? So right now we're sitting at $10. To quickly cover the supports, because the main focus is going to be the resistance, we have a 960 support and an 870 support. Now again, these are our first deviations between both the 6-month and the 1-year chart. So those are going to be the 2 key supports we're paying attention to. Obviously today, this 960, this is the one we broke. So as long as we can hold this, obviously we are going to be a lot more bullish. But what are then the key resistances we want to be paying attention to as we continue to move up on this stock? So if we push higher, we have a 1035 resistance. This is definitely one we could be looking at seeing today. That's only about a 23 cent move from where we are now. So that could definitely be a notable resistance for today. And if we are able to get past that level, then if we go higher, we have a $12 resistance. Now, this is where you come to extremely overbought areas. Whenever you watch in our channel and you see the green levels, what these are 3rd deviations. And if you understand standard deviations, you know the 3rd deviation has a 99% probability that the stock or the data trades below that level. So as we see the stock move down, we really expect the stock to start to pull back as we break up into that level. Again, it is the stock market. Nothing's going to be 99.7% accurate, but it does just give us a good signal that if we push up to $12, a pullback is quite likely. And if we did continue higher, we do have 2 more key resistances to be paying attention to, and these are very far off, so I wouldn't be looking at these for, you know, to happen in the next few days or maybe even weeks. But if this stock does continue to kind of squeeze, try and push back kind of year highs, then we can start looking at the $16 resistance, which would be our 2nd deviation from the 6-month. And again, 2nd deviation means 95% should trade below. And then our absolute final deviation level is at $22.25. So this is really the highest we can see the stock going in any reasonable doubt. So the way we tend to use these levels is if we are looking to short the stock and stuff like this, this will normally be where we look to take the bulk of our size. And again, we always buy protection, because if a stock breaks out of this level, this is really where you can get that squeeze mentality. So again, if we're ever shorting this level, we're always buying protection, because again, if we come out of here, we can just buy the calls to define that risk, because in a case like this, if the stock doesn't pull back here, this is when it can fly a few 100%. and the shorts get trapped. So if we are shorting, we don't want to be trapped. We want that protection. So again, we can buy the calls to define that risk. But again, just to cover then the key levels one more time, the supports we have 960 and 870, and to cover the resistances we have $10.35, $12, $16, and a final one at $22.25. Overstock, ticker OSTK, is down 20% today. Now, why are we selling off this far? Now, this is down to the Bed Bath & Beyond news. So obviously this stock bought up, or this company bought up Bed Bath & Beyond. That's why you had this kind of massive run up after their bankruptcy. Just because, again, Bed Bath & Beyond was kind of that meme stock. I think investors kind of took that as a bit of a more of a bullish sign. Or some Bed Bath & Beyond investors may be jumping to Overstock to then kind of have that same exposure. But not really to a massive surprise. The retail units, before they bought it up, were struggling to be profitable or actually losing money. Now they've got it as an online-only business and they're still losing money. So not really a massive surprise there, but we are selling off of this news. So what are going to be key levels that we're paying attention to because of this? So to cover the supports first, because that's probably going to have to be the main focus on a stock like this, we have $20.35. We hit this at the open today. We got that day trading opportunity long. Now, considering if we push back down, that's going to be a retest. I wouldn't be looking to now be long bias out here, because again, if you're trying to push a level twice, more likely than not, you're now going to try and break it. So instead, I'd be waiting for that next support, which is going to be $18.50. And if we push any lower, we then also have another support at $16. So we have those two key supports, $16 and $18.50, where I would start being a bit more long bias on Overstock. Now, to cover resistances, what else do we want to be paying attention to? So $23.75, that's also a level we did actually kind of just break through that kind of straight on the open. Again, we could be paying somewhat attention to this, but that I would use more as a target. So if we're getting along at 18.50 or below, that would be a relatively good target, but I don't think it would be a level where I look too short as we come into it, just because I don't really like shorting stocks when they're kind of already massively down, because then I think your downside's kind of, or your upside on the trade is kind of limited, while the downside is still massively there. But if we continue to go higher, we break that 23.75, then we can start paying attention to some new resistances, where I would actually probably start looking to be a bit more short bias. And again, if we're holding the stock long still, these can be used as some good targets. But we have $29.30, and we have $33 to kind of $34 as another key set of levels. So again, that's going to be the key focus on a stock like Overstock. Again, to cover the supports, kind of long bias at $18.50 to around $16. We would start looking to take main profits, kind of coming into kind of where we are now. But if we can break higher, $23.75, and then if we broke any higher, $29.30 and above, so also including the $33, $34 levels, that's where I would start looking to kind of open a new short position and look to now start trading that downside opportunity. Roku is up nearly 8% today. Now, why are we up so much today? This is off the fundamental news release that Roku are looking to cut their costs even further. So again, if you're able to cut costs while keeping that revenue in line, obviously you're going to increase those profit margins and in hand increase the net profits. So we're gapping off this news. Again, sometimes this can be an overreaction, which could be potentially what we're seeing now, and that's why we're starting to pull back. But what are key levels that we want to be paying attention to? So on the support side, we have an 84.25. This is our first deviation on the 1 year. But I really like this level, because you'll see this is most likely why we had a big move off this release. And that's just because we were coming into a kind of a heavy area where a lot of orders are sitting. So this 84.25, not only is that where large orders are sitting, but it's now also going to be a gap fill location. So that should be quite a nice support on that pullback if we do continue all the way back down to 84.25. And just to note, we did have one other support at $68, just in case you're waiting for kind of that longer move, or if you're watching this video maybe a few weeks down the line. But for the short term, 84.25 is going to be that key support. Now to cover the resistances, you can see on the open we hit this 95.20. We hit that straight into the open. A lot of sellers are going to be sitting there. That's why we start to sell off, and we did continue through, and we broke straight through that 91.75. Again, whenever you're moving off a fundamental release, we tend to be a bit more calm on taking these levels, unless we're looking for more of a scalp trade. And the reason for that is, again, we can break through these levels very quick when there's some sort of a fundamental news kind of attached to breaking these levels. But if we do continue to push back up, again, I would kind of ignore this 91.75 just because we haven't really respected it today. And instead focus on the 95.20 if we come in to test that again. And if we break through there, we can break through that $100 psychological level. Then we have kind of two more key levels around that 103.60 and 106. And if we were able to break that, we do have a final level at $115.50. And again, considering how ROKU's been moving, even just kind of looking at the last 3 months, considering we went from around $50 to $90, or even at that case, actually $100, you know, if it's doing 100% move in about 2 months, it can definitely, you know, have that reaction to either the up or downside. So we could easily come down, test the $84.25 or the $68, and that's why we noted those two key supports. But it can also have that reaction back to the, or continuing to the upside. We could definitely come and retest this 95.20. If so, you'll probably see a lot of shorts sitting there. So if we break out, it will most likely be quite a strong breakout to then test that $100 resistance. And then again, we've got the two next deviations at 103.60, 106. So it's going to be a very strong level. This is where I'm probably going to start shorting. And again, we'll probably short the shares, but we buy the calls to define the risk. And why do we buy the calls? Because we never want to be shorting a stock nakedly. So if we're shorting shares, we're always buying protection. So if for any reason this stock did squeeze, again, probably not as likely on a stock like ROKU because there's just so many shares outstanding. But if you did ever get caught in the squeeze, buying that call will just define you that risk. And so you never kind of get trapped in any sort of short squeeze. And again, that final resistance at 115.50, which is kind of my favorite key level to short whenever we can get to that final third deviation, whether that's a 6 month or 1 year level, that doesn't matter. In this case, it's a 6 month level. Always going to be a really strong resistance to look to short. And again, that's when I'll probably short the shares, buy calls, obviously define the risk like we talked about before. And a lot of times I'll just do kind of vertical spreads at these levels because the probability that we start to trade below there is going to be quite high. Because again, if you understand standard deviation, you know at third standard deviations, that means that 99.7% of data should trade below that level. So again, in the stock market, nothing's going to be that accurate, but it does give us a good signal that if we trade at these kind of highs and even that 106, we're going to most likely quite quickly try and pull back and start trading below that level. In this video, we are going to be analyzing T2 Biosystems, ticker TTOO. Now, when we covered this before, the levels haven't actually really changed all that much since the last time. So again, we did call kind of this resistance here, could play that pullback, and we basically caught this top here to play that pullback again. You can go back on the channel and check out those levels to see how they performed. But what are the key levels we want to be paying attention to as of now? So again, we are seeing a bit more buying pressure coming from here. This is because we got bought up on the 3 month anchored VWAP. What we are testing right now though is our 38-cent resistance. That's our first deviation from the 6 month. So we need to start seeing how we react through here. And the way I tend to do this is probably looking on at least a 1 hour chart. If not, you could look on either a 4 hour or daily chart. And it's seeing how we react to this level. Again, as of right now, we are pulling back. That is to be expected the first time you're testing it for a fresh time. But it's really how do we react to this overall? Do we break above, come back, test it as a support and hold? If so, then we can look to play to the upside. On the other hand, if we just test this resistance, start to sell off, then again, we are probably going to continue down. And I'm not paying attention to this stock if we continue to the downside. We don't really have any supports. So it's kind of just trying to buy a falling knife. However, if this level does break and we can hold it, what are key resistances that we can look to trade to? So again, if we're trading the kind of 40-cent support, we can trade that to 71 cents. That's basically that previous high that we created. And again, still our first deviation over on the 1 year. So that could be the target. And also from here, this is when I would be a bit more confident in starting to short the stock as well. Wouldn't want to short this 40 cents because again, the kind of risk reward is probably not going to be that great. Can easily squeeze, but again, we don't have massive amounts of downside. However, from that 70 cents, again, if we buy some protection, then it's fine if it goes against us, but there's definitely a downside opportunity back down to 40 cents. So that level should be quite nice. If we break that, we have another resistance at 90 cents. We have 145, 225, and 375 as further off resistances. So again, we have a lot of resistances, and I mean, that's what you expect with these kind of stocks. If you zoom out on a stock like this, how has it been performing? All it's been doing is selling off really since its IPO back in, I think that was 2014. So when you see stocks like this, again, I like to play the overall trend. If I'm seeing a stock sell off non-stop, I don't really want to be buying it. I would much rather be shorting it, and that's why I'm paying attention to the 70 cents and above I'm short bias coming into there. So again, short at 70, I'm short at 90, I'm short at 145, I'm short at 225, and I'm short at 375. So all of these levels I'm happy to be more short bias at. And again, for targets, you just always use that level below. So if we short the 145, we're looking at a 90-cent target. So again, that's really the main thing I'm looking at on a stock like this. If it does squeeze for any reason, that's my opportunity to get in and look to play that downside opportunity. And again, does have options, which is great, because if we can get some shares, again, it's hard to borrow, but normally it just means you're paying a bit more to short them. If we can short shares like this, again, it does have options and they're somewhat liquid. So we can easily buy protection, which again, if we're shorting shares, we definitely want protection, because then even if it does short squeeze or anything like that, you have a defined loss. You don't want to be risking your whole account on one trade, because again, obviously it does not make sense from a risk management perspective. So if we're shorting the shares, we're buying calls to define that risk and look to play that downside opportunity. Tilray brands, ticker TLRY, is up 10% as we're recording this video. What are going to be the key support and resistance to be paying attention to? So we are seeing some strength in the stock, so we will cover the supports first. We do have one at 325 right now. Again, that could be a support resistance as we're very close, so it just depends how we react. But if we continue to fall, we have $2.90, $2.55, and $2.40. These would be all the key supports where if you're long bias on a stock like this, we could look to buy these up to continue to play that upward trend. However, these aren't oversold areas. So again, if you're looking for kind of a long-term investment, or if you're like me, who is a reversal trader, these usually aren't going to be levels we look to buy because the stock is still considered extended at these levels. However, if the stock does continue to go up, and this is going to be really where my main trading opportunity is. If we continue to go up, we have a resistance at 342, and we actually have only one other resistance after that at 390, which would be our final resistance, which is our third deviation from the 1 year time frame. So we are actually having the Tilray alerts go off now because we are squeezing up to this third deviation. So again, two resistances that I'm mainly paying attention to. I'm short bias coming into these, so again, you'll probably see how it's reacted to this 342 after the videos come out. What's great on a stock like this is, again, we do have options. So what we can do, even though it's hard to borrow, just means it's going to cost us more to short it. We can short the shares and we can buy calls. The reason we do this is we can play the downside move on Tilray while having defined risks to the upside, because if we trade it without defined risk, you can easily blow an account on one trade. If this stock did some short squeeze, again, if you're shorting say 1,000 shares overnight, it does 100% move overnight. Not much you can do to really define that risk if you haven't bought that call to define that risk. So again, that's why if we're trading these, I like playing them to the downside, but I'm always buying calls or some sort of protection to define that risk, because we will never trade anything with unlimited risk. So again, looking short at 342, 390. Targets would be 325, 290, 255 going to be those key supports or slash targets on the downside. In this video, we are going to be analyzing Verb technology, ticker Verb. So to get straight into it, we are up 140% as we are recording this video. So what are the key levels we're paying attention to? So from a support side, if you're watching this video today, we have the anchored VWAP as a support, that's 158. Whereas if we're looking to get into this trend, we can look to kind of add at the anchored VWAP. That's how I use that level. Normally going to be in line with the normal VWAP if we haven't had a move the day prior, by the way. And the only other support we really have is the gap fill location that was created yesterday at 72 cents. So again, yesterday's close. But really the main focus on a stock like this is going to be on these resistances. So let's start paying attention to these, and what do we want to be paying attention to? So if we continue to the upside, we can have the 3-month anchored VWAP around 176. We've hit that today, but again, that's not a massive level, so we would look for the break of that level. And if so, then we start coming into the key deviational level. So 264, 348, these are our first deviations, that one from the first year, and the 264 from the 6 month. These are both super strong resistances. If we come into here, what I normally use these as, they're not normally extended enough to start shorting the stock, but they are good levels to be taking in profit. So if I was holding the stock long, again, that's going to be my target range. Now, again, not really looking to short here. I prefer stocks to get more extended before I short. So we would be looking for a further move to the upside, and this would take us to $5.20, and we actually have another resistance at $8. So again, these are going to be the two key resistances we're paying attention to. If we're long biased, these are going to be targets. If we are short bias traders or reversal traders like myself, these are areas where we start becoming really overbought on the stock and can actually start looking to play the downside. So from this $8 and 5.20, I'm looking to play the downside. Again, if we're short in the $8, 5.20 going to really be that key target. If we're short in the 5.20, 345 slash kind of 265, going to be those two key supports we're paying attention to as our key targets. And again, if we're trend traders, if we move up to these kind of higher levels, we start to pull back to these deviations. These could always be used as entry longs. If you're more of a trend trader, again, I don't really use the levels like that, but if you are a trend trader, you think it's going to continue up, there's maybe some good fundamental news coming out, then again, those could definitely be areas where we could look to potentially add on the retest.